All right, guys, for this next video, we're going to be only talking about liquidity. This is the #1 confluence in this model. This is all that matters. All that matters is liquidity. Liquidity, 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 liquidity. You need to know what the drawn liquidity is. You need to know what liquidity we need to sweep. And then when we sweep that liquidity, you look for your entry. We're going to all talk about liquidity. Okay, here we go. Here we go. Now, here is the types of liquidity. Okay. You have overnight high low, low a day and high a day in New York, 4 hour, 1 hour high low, data high low. Let's go over them one by one. Okay. So overnight high low means London and Asia high low. I have this indicator here. You can download it. It's called ICT Kill Zones and Pivots. Once you download that on TradingView, it will automatically do this. Okay, here are my settings. I will also show that. Here are the settings. You could just copy these settings here, and then it will automatically draw out the Asia and London sessions for you. Okay, now let's go full screen on this thing. Okay, so when I wake up in the morning at 9:30 a.m., this is my #1 confluence every single day. Okay, now you have 4 areas. You have the Asia high low and the London high low. So those are 4 areas. Now in this instance, right, you see that the Asia high was taken here and then the London high was taken here. So we're only left with 2 areas. We're left with London low and Asia low. So these are major draws on liquidity. So not only can you expect price to at some point in the day come and sweep these areas, but once price does come down and sweep these areas, you can expect to get a reaction and then a reversal. Okay, very, very important. You're going to see this countless times right here. That's actually a low a day sweep. Let me find a right here. So here's a perfect example, right? This blue line is Asia. This red line is London. We came up, we swept London, came up a little bit more, swept Asia, and then we had our dump. And that's what I look for every single day. Now, you could take 2 types of plays, okay? There are draw on liquidity plays, and there are just our bearish or bullish reversal plays. I don't even know if I have an example of a draw on liquidity play here. This would be a draw on liquidity play, actually. Okay, so let's talk about the draw on liquidity play. This setup will not have as high a win rate as the other setup, but this also involves liquidity because this is a data low right here. I'll get into data lows later in the video, but just know that this is a very strong level that price wants to go to. So even though we have no major liquidity sweep up here to warrant this bearish reversal, because I know that price wants to come to this level, if you get a clean IFVG setup in that direction, you can take it and kind of ride the wave and just ride it to the level you're seeking. And that's what I did right here. So that's what we call a draw on liquidity play. But the much higher win rate is just going to be waiting for these major liquidity areas to sweep, the ones I drew over here, and then waiting for your reversal. Okay, so we talked about the overnight highs and overnight lows. This is my #1 confluence every single day. I wake up at 9:30. I say, where are my London and Asia high low? I wait for one of them to sweep, and then I look for our reversal. Okay, second of all, you have a low a day, a high a day in New York. Now, this is not used as often in the morning session because you need liquidity to rest. Now let me go to 10 a.m. real quick. Okay, this is around 11 a.m. Okay. Here's around 11 a.m. Now, here's the problem. Liquidity, you need liquidity to rest. For me, you see right here, this high right here, this high right here is the highest point. Once this is swept, this high was the highest point in the New York AM session because you see this line right here. This is when the session opens. So this is the highest point. Now, this would technically be a New York AM sweep because we're sweeping the highest point. But because this sweep happened at 10:08 and this candle formed at 9:45, that is only 23 minutes later, that is not a significant sweep for me. With liquidity, you want it to rest. You want to make sure there are resting orders there so that when those orders are forced to get filled, you're going to get a reaction. So for me, you can forward test this, you could back test this, you could see what you like, but for me, I like the liquidity to be resting at least an hour to consider it major liquidity, okay? So in this case, only 23 minutes later, you would not call this a major liquidity sweep. But now, once 11 a.m. closes, okay, and you have the new New York high a day here at 10:10, it has now been an hour, right? Because you can see this is 10:14 at the bottom of the screen. So now, if this were to come and sweep, I don't even know if it does, but now, yep, so now if you come up to sweep, now you would call this a major liquidity sweep. And again, we would look for reactions to see what we can do. And wow, I mean, we dump there. So that just goes to show you exactly what I'm talking about. Yeah, we come up, we sweep, we have bearish reactions, we inverse this gap right here. You enter short once you get a candle close below the gap, and then you target opposing ends of liquidity, right? Now, what are opposing ends of liquidity? In the previous video, we talked about swing lows. So you can target these swing lows in, these obvious swing lows where you have the lowest point in a set of 3 candles. So you have these swing lows, you have this swing low, and then you could also target low of day. This would be a major liquidity sweep because this low of day was put in at 9:35. Current price is at 12:16. That's almost 3 hours. So this would be major liquidity resting here. So yeah, that would be another thing. So like I said, when you're using New York AM high a day and low a day, it's really tricky to use it if you're trading the morning session. This Confluence is really just for PM traders because one structure forms and 11 a.m.'s gone. You can use that structure for the PM session. But that is another major liquidity area that I look for. Okay, now we'll talk about 4-hour high and low. So you're going to have a situation, there will be times and there will be a situation where you're going to wake up in the morning, and I told you previously that we look for these overnight areas every single day, but you're going to wake up someday and there's going to be a situation where all 4 of these levels have been swept before the New York Open happens, and that's going to suck. Those are the worst days because we can't use our number 1 Confluence, but the backup would be using 1 hour and 4-hour highs and lows. Okay, so if I open here, you see this on the bottom of the screen, it's 9:39. I would go to the 1 hour, and then I would go to the 4-hour, and you can really see again the swing high. Look, there's 1, 2, 3 candles. This is the highest point. This is your swing high. You can go on the 1 hour. 1, 2, 3 candles. This is your swing high. So now, let's just, for the sake of the argument, let's just say that we have no overnight areas. We have to rely on these 1 hour and 4-hour highs. Now, if you wanted to be bearish and look for shorts, you would wait for price to come up, sweep one of these areas of liquidity, get bearish reactions, inverse an inverted fair value gap, and then you'd short to the opposite side. You understand what I'm saying? So this is another side. Now for this one, again, it's going to be very important. You can't just blindly short as soon as we sweep a swing high. You need to make sure you have good reactions. And what I mean by good reactions, let's get an example right here. Here's good reactions. This happened yesterday. I took this trade. We came up, we swept the 4-hour high. We didn't pump past it. We didn't disrespect the level. As soon as we took that level out, price instantly started selling. It almost looks algorithmic. So that is what I mean by good reactions and good momentum. You don't really want something like this. Even though this worked, you don't want something like this where price is kind of just accumulating. It's not really showing what it wants to do. It's kind of just waiting around. that's going to be way lower confidence and lead to a lot more losses. Here's another example. I'm not results oriented. I don't care that this play went 100 plus points. This was a bad reaction because you can see here we swept Asia, chopped around for almost 30 minutes down here, and then finally made the bullish move. But I'd much rather have a reaction like this, where after 2 1-minute candles we're just dumping after the sweep. So reactions are very important. And the last but not least type of liquidity I look for is data highs and data lows. And this is a very niche situation. We can go to I made a data high tweet that we can look at. Here it is. So again, you can use Forex Factory. This is a very good website where I check US news, and basically it'll tell you when there's red folder, yellow folder, and orange folder. That is high impact, I think medium impact and low impact, but I really only care about red folder. So when you have red folder news, there could be something called a data wick. And what that means is an abnormal candle created on the 1-minute chart as soon as the news comes out. And essentially there's a ton of liquidity resting there because all the volume and orders, and we will target that because we know price wants to come and take it. So again, here's what you would do. You take out one side and target the other. Here's an example. So at 10 a.m., we had red folder news. We created an abnormal wick. It doesn't look anything like the other candles. This is purely manipulated by news. You wait for one end of the wick to sweep. Once we take that out, you see price instantly starts selling. We inverse a gap, and then you enter short, targeting the other end. That is how I use data lows. Now, you're not going to see this sort of play develop as often just because we don't have enough high impact news to create these wicks as often. But whenever they do come out, the win rate's extremely high. So that's pretty much it, guys. That's the liquidity video. Short and simple. Again, look for the overnight highs and lows every single morning. If those don't pan out, or those get swept, or they're not available, your backup is either going to be the low a day, high a day in New York. If you're trading the morning session, you might not be able to use them, and you're going to have to go for 1 hour and 4 hour highs and lows. So that's pretty much it, guys. Again, liquidity is by far the most important thing when trading ICT and when trading this model. So please make sure you understand it, and just send me a message if you have any questions.